We're talking about Snapchat today. The stock is down about 1,000,000%, and it's a trap. It's dead money. Do not invest in it. I'm not saying that to anybody else. This is a video to myself as a reminder not to go for these falling knives in dead companies. They feel like they might be a good value, but they're not. They're a trap. If you watch this channel, you know I'm building a portfolio right here out in the open, transparently. $10,000 to $1 million over 10 years. We are long-term investors. Current value is $65,750. We were up $2,000, almost $2,400 on the week for almost a 4% gain. We got crushed pretty bad on Friday, down $3,700, down 5%. All time, we have put in $74,000, $73,500. Current value is $65,750, and we are down $7,700. You can see we started on February 15th, and I've been adding money. That's why the value is up, but we're still down. And we were doing well, almost fully recovered, and then we just had this little drop on Friday. So we'll see what happens next week, but this is a 10-year portfolio, and I would actually prefer that great companies go sideways or down for a long time so I can keep buying more shares. Obviously, I want the performance to be good over the long term. Let's look at the winners from this week. If you want more details on the companies I own and buy reports and all that stuff, I have an email newsletter linked down below in the description, austin.substack.com. All right, the best gainers on the week. The Tesla up 13%, Cloudflare up 10, Trade Desk up 10. Who knows what's going to happen with this because of the Snapchat results, which we're going to get into, and advertising fears. MongoDB up 9, Crowdstrike up 3, Gitlab up 2.5, Rocket Lab up 2.5, Datadog flat, Snowflake down 3, and then Meta, because of the fears, down 5%. So let's jump into just how horrible this quarter was for Snapchat and why I'm not interested in it at all. They wrote this shareholder letter. You don't even have to read any of the words. All the crap they say up here is just it's just a bunch of words and a bunch of distraction. This company feels distracted. Plus 13% revenue year over year, only on $1 billion in revenue. We're going to talk about that in comparison to things like Meta, Google, even the Trade Desk, Roku. Talk about how just disappointing that is on how little revenue they have compared to others. And then let's see, they said they expanded their gross margin, which is funny. We'll get to that in a second. But here's what happened. Operating expenses also expanded. Adjusted operating expenses also expanded. And this is the major concern, right? Like, growth is hurting really bad. What's the path to growth recovery and more profitability? I don't know. But what we're seeing is GAAP net income at negative $152 million in Q2 of last year. And this year, Q2 is negative $422 million with less growth. And then I don't even think the company provided guidance, which means they have no idea what's going to happen. Adjusted EBITDA, $117 million last year, $7 million this year. And they announced a $500 million stock repurchase program. This is the dumbest thing they could have possibly done if they're actually trying to fix the business. This is just trying to stop the share price from falling. If they actually cared about fixing the company, they would invest in growth, not a stock buyback. This tells me they're trying to give shareholders confidence, maybe trying to pad the stock price. That just makes me think that they're trying to cover, stock-based compensation and executive salary and put a bottom in there, a floor in there. I just don't like it in this situation for this company. Free cash flow was negative 116 Q2 of last year, now on negative 147 million. Just bad numbers all around. Bad. Analysts came out and they said it was a remarkably disappointing quarter. Usually I don't pay too much attention to what analysts say, but I agree with them here. This was just really bad. This analyst said that the company's suffering from fundamental and problems with the broader economy. I agree there's some problems with the broader economy, but I also agree that Snap has its own fundamental problems as a company, which is why, full disclosure, I own Meta. I think Meta has some problems. They're making a transition, but they're in a much stronger position and actually investing for growth, or at least trying to. Even if they're wrong about the metaverse, at least they're dedicated to it versus Snapchat. And Meta has over 3 billion active users where Snapchat has, 300 million or something like that. And so they're citing this, and I talked about this in a write-up on Meta, but everybody's trying to switch to use their first-party data. Snapchat doesn't have good first-party data, in my opinion. Again, back to that 300 million users versus Meta, Facebook, having 3 billion users and a lot more first-party data, which is still a huge transition that they got to make. But who's going to make that transition better and be in a better spot? Somebody with 3 billion users and the cash flow that Facebook has, or somebody like Snapchat. In my opinion, it's Meta. All right, so this analyst said that it appears to be a greater work in progress than they earlier pointed out, given the magnitude of the near-term revenue decay. We could see the same thing from Meta next week, but again, I'll look at their quarter too. I just think they're operating from a much better position of strength. Talk about how it dragged down the other stocks. Another analyst talked about how EBITDA and daily active users were ahead of expectations. However, the lack of formal third quarter guidance and the continued headwinds of macro iOS change from Apple and competition resulted in a cut. So they cut the stock price. When fundamentals change this dramatically, it's hard for us to not change our investment opinion, however belated the call. They say they still have impressive user growth and several sizable untapped opportunities such as Spotlight, Maps, AR, shopping, but they are not likely to be meaningful in terms of revenue in the next 6 to 12 months. They also noted that some of the ad budget that was on Snap may have gone to Meta, citing channel checks. I agree with that. I think that's what's going to happen. That's why I bought Meta. I think people are going to want to go to the highest value places and the places that can best track it. And Meta, with all of its properties, Instagram, WhatsApp, Facebook, family of apps, the investments they're making in the metaverse, that I think is where the money's going to go, even though there's going to be less advertising budget, and it's still going to be hard for Meta too. 8 firms downgraded the company following the results. Tough sledding ahead for Evan Spiegel-led company. Why would you own Snap when you could own Meta, even Twitter, which I don't want to own, Google, The Trade Desk, or Roku? On a PE basis, forward 1 year, Meta's at 16, Twitter's at 40, Snap's at 80, and Google's at 20. Then 3 years out, Meta's at 11, Twitter's at 26, Snap's at 15, and Google's at 14. But they don't even know what their earnings are going to look like. And then even the Trade Desk comes down to 31. So then if we look at sales and we look at EV to sales trailing 12 months, Facebook's at 4, Snapchat's at 6, Twitter's at 6, Google's at 5, the Trade Desk is at 18, and Roku's at 4. Why on earth would you own Snapchat right now, or even Twitter, when you can own Meta, even Google, even the Trade Desk? I mean, that's a little bit more expensive. People might not like that. Or even Roku at a price sales trailing 12 month of 4. And again, let's look at gross profit margin. Meta at 80%, Twitter at 63, Snapchat at 60, Google at 56, the Trade Desk at 81, and Roku at 50. Why on earth would you want to own Snapchat right now? That's my question. Jump to net income. Meta, 37 billion. Twitter, negative 111 million. Snapchat, negative 560 million. Google, 74 billion. The Trade Desk, 100 million. And Roku, 139 million. So you can get better growth, better gross margins, much stronger cash position, much stronger cash flow, better gross margins from Google and Meta. Google might not be better gross margins, but still, Snapchat, why own it?